We'll be getting started here soon, guys. We're just getting a couple things set up.
All right, everybody, we're going to give everyone just a few more minutes to get into the room. Just to let you all know what we're going to do today, the very first part of the presentation is me going through the actual lesson. And then Ray is actually going to pull up stock charts or trading view to just show you how to plot these particular leading and lagging indicators on the chart. And with whatever time we have remaining, we're going to try to answer as many questions as possible. So if you guys can hear me, please put a 1 in the chat just so that I know that I'm good. All right, cool. So just a few more minutes, everybody. And also, everybody, just a quick reminder, as you enter the room, please don't forget to mute your mics. We don't want to, distract anyone from learning. All right, so let's go ahead and get started. We're going to have a hard stop in exactly 1 hour. Today, we are going to be discussing leading and lagging indicators. So to begin, the leading indicators we're going to discuss today are going to be the relative strength index, which you will hear referred to as the RSI. We also have the stochastic oscillator. The lagging indicators are going to include the EMAs, which would be the exponential moving averages, the moving average convergence divergence, which is also known as the MACD, and then we're also going to discuss the Bollinger Bands. Now, just a little bit about myself before we get into it. My name is Kayla. I go by iCurlyK on pretty much every social media platform that I'm a part of. I'm a mother of 1. I am also an executive account manager. I'm celebrating my 14th year in March. I am a cosmetology grad, a trading admin or a provider, and I am also a Florida resident, a self-taught yogi, and a naturalist. So, first order of business is the disclaimer. I am not a financial advisor, and this is in no way financial or trading advice. I am simply sharing options trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only, and there are significant financial risks involved with trading, and I am not responsible for your losses in the market, so don't at me. Should you decide to utilize the information and/or strategies discussed within this presentation, and by choosing to proceed, you are acknowledging your understanding of this disclaimer. I also always like to put in a relative trading quote that is going to kind of be in reference to what we're talking about for the day. So we're talking about indicators that lead us in a certain direction. So efforts encouraged are not enough without purpose and direction, by John F. Kennedy. So leading and lagging indicators. A leading indicator tells you what is potentially about to happen, and a lagging indicator tells you about what has already happened. So, our leading indicators are tools designed to anticipate the future direction of a market in order to enable traders to predict market movements ahead of time. In theory, if a leading indicator gives the correct signal, a trader can get in before the market movement and ride the entire trend. However, leading indicators are by no means 100% accurate, which is why they are often combined with other forms of technical analysis. So the relative strength index, which is a very, very simple one to look at on a actual chart. It is a momentum indicator which is used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. This indicator tells you if a stock is overbought. So if you see it above 70, that means that it's overbought. And if it's oversold, that means it's below 30. Anything between 30 and 70 is considered to be stable. You get buy and sell signals from your RSI. And I'm sorry, could everybody mute their mics, please? So you receive buy signals, which come in oversold conditions, and sell signals come in overbought conditions. And a really cool tip that you can use when using the RSI is you can look at the history to determine key sell-off points. And what you would do is zoom out and look at the macro view, look at the larger view, and plot areas of support and resistance on the RSI. So that's a way that you can actually kind of predict when there will be a sell-off. So again, this particular indicator tells you if a stock is overbought. If something is overbought, typically you can get a general feel that there may be a sell-off coming soon. And if it's oversold, then that means that that's a potential area where you can buy. So overbought conditions would be a sell signal and oversold conditions would be a buy signal. Now let's talk about the stochastic oscillator. This particular indicator compares whether price closed relative to price range over a given time period. The stochastic oscillator is displayed as two lines, the main line, which is the K line, and the second line, which is the D line, which represents a moving average of K. The K line moves faster and has a 14-day look back period. The D line moves slower, which makes sense because it is a 3-period simple moving average of the K line. So I know a lot of that sounds like, a foreign language to you, but one thing to keep in mind are the buy and sell signals. When the K line breaks above the D line, it indicates a bullish or buy signal. So for example, when this K line, which is the blue one, which is why I put this over here in blue, just so that you can reference which line it is, but normally you would see it in black on the chart. So when this blue line actually breaks above the red line, you might actually see, so for example, right here, it's breaking above the red line, and then guess what happens? Over here, you're actually seeing that there's a bullish move. You see the stock price actually begins to rise, or the candlesticks begin to incline. That's a buy signal. And when this blue line actually breaks below the red line, that indicates a bearish or sell signal. So once you see it begin to fall below the red line, that's a bearish signal. Now, the stochastics measure the momentum of the price, and keep in mind, momentum always changes direction before price does. Stochastics are used to show when a stock has moved into an overbought or oversold position and can serve as an entry trigger. A stochastic value of 20 or below indicates an oversold condition, and a value of 80 or above indicates an overbought condition. So those numbers would be plotted right here on this line. So if it's basically below 20, then that's going to indicate an oversold condition, which is a key entry to buy calls, for example. And if it's above that line, or above 80 rather, that's going to give you a sell signal. If the market is in a downtrend, then what you would want to look for is overbought areas to show you where the pullback could potentially end. And if the market is in an uptrend, then you would want to look for oversold areas to show you where the pullback could potentially end. And do not blindly trade oversold or overbought conditions. Please always use more than one indicator and pay attention to the strength of the momentum as well as the direction of the trend. So the strength of the momentum, this is a very, very strong move right here. Very strong move. And then you also see that this stochastic oscillator is confirming that as well. You get a very good buy signal because the blue line is actually crossing above the red line. And then you also have this right here to be your area of confluence and to confirm that this is a strong move upward. So you would get a very good payoff from this particular move. All right, and I just want to do a real quick temperature check just to make sure that everyone could hear me. If I can get some ones in the chat, make sure everyone is good. All right, cool, cool, cool. Let's keep it going. Now, please remember, the relative strength index and the stochastic oscillator are both price momentum oscillators that are used to forecast market trends. Despite their similar objectives, the two indicators have very different underlying theories and methods. The stochastic oscillator is predicated on the assumption that closing prices should close near the same direction as the current trend, while the RSI tracks overbought and oversold areas or levels by measuring the velocity of price movements. The RSI is more useful in trending markets, which is why you see a lot of traders use this one. And the stochastics are more useful in sideways or choppy markets. So when you're seeing the market kind of consolidated or moving sideways or not really picking a direction, then that would be a good time to use a stochastic oscillator. All right, so now we can go on to lagging indicators. A lagging indicator is a tool that provides delayed feedback, which means it gives a signal once the price movement has already passed or is already in progress. These are used by traders to confirm the price trend before they enter a trade. These indicators are commonly used by trend traders. They don't show any upcoming price moves. However, they confirm that a trend is underway. This tends to give traders more confidence that they are correct in their assumptions rather than providing a specific trigger for entering the market. Okay, let me see here 1 second. Hopefully that's better for you guys. All right, so the exponential moving averages. Let me just move this box out of the way. I'm sorry, you guys. That's kind of why I had it minimized. So I'll maximize it again, but give me 1 second here. All right. So the exponential moving average is a technical chart that tracks the price of an investment like a stock or commodity over time. The EMA is a type of weighted moving average that gives more weighting or importance to recent price data. So I'll go ahead and maximize it again for you. The EMI is usually respected more than the simple moving average. EMA in simplistic terms is the average price of a stock over a fixed period of time that gives more weight to the most recent price action. So I'll break that down for you. If I am using the 9-day EMA, the EMA is basically going to be the average time. So it's a 9-day period, and it's going to give more weight to the most recent price action. So if I'm using the 20-day, it's going to give me an average over the past 20 days. If the two moving averages come together, they are said to be converging. And if they move away from each other, then they are said to be diverging. So those are two words that you're going to see when people are referring to the exponential moving averages. Now, some intraday traders or day traders use the 8 and 21-day EMA, but the most popular day traders or the most popular EMAs that day traders use would be the 9 and the 20-day EMA. And for swing trades, which basically means you're holding longer than one trading day, most traders range between the 9, the 20, the 50, 100, and 200-day EMA. The 50 and 200-day EMA are most notably used as signals of long-term trends. And they're also, strong levels of support and resistance as well, because they're giving you an average over a longer time frame. So hopefully that makes sense. All right, so the MACD, the moving average convergence divergence, is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. It acts as a trend for buy and sell signals. So you guys, one thing I want to point out is that I was very intentional in color coding these so that you can know what color is in reference to what line. So I have the MACD line in blue, which is the slower line. So if you can see over here at the bottom, I color coded that in blue so that you would know that that's the slow line. And then of course, the signal line is the 9-day EMA line, which is in red. All right, so I'll keep going. When the slow line of the MACD falls below the faster 9-day EMA line, which is a signal line, this gives you a sell signal. When the slow line of the MACD rises above the faster 9-day EMA line, which is a signal line, this gives a buy signal. So I put those in red and green. When the MACD crosses above the zero line, and the zero line would basically be right about here. This is the zero line, okay? So that's what that means. When the MACD crosses below the zero line, it generates a sell signal, which is bearish. And when the MACD crosses above the zero line, it generates a buy signal. The histogram, and this over here is what the histogram looks like. Now, when you see it in TradingView or stock charts, you may see it turn from a dark green color to a lighter green color. Sometimes that indicates that the trend is about to change. And then you might see when it's red, you might see it turn to a faint kind of pink color. That kind of indicates that the trend is potentially changing as well, or changing direction. So the histogram is positive when the MACD is above the signal line. And the indicator is negative when the MACD is below its signal line. The histogram can also give an early warning signal for a change in direction.
You don't want to watch this?
All right, could you please mute your mics, everybody? Thank you. Thank you. All right. So now let's talk about the Bollinger Bands. This is a technique consisting of a center line, a moving average, and two price channels. Then the price channel is basically a volatility band above and below the center line. And it typically follows the 20-day exponential moving average. So I am someone who likes to use the Bollinger Band. So what I don't do is I don't add the 20-day exponential moving average on my chart. Because I use the Bollinger Bands, and that middle line in the Bollinger Bands follow the 20-day exponential moving average. Now, with low volatility, the Bollinger Bands will narrow. And the expectation rather is that you will get a big move once the volatility begins to pick up. The Bollinger Bands will widen at times of increased volatility, which indicates the current trend may be ending. This idea, or the idea, is that the two standard deviations should capture 95% of the price movement. So what that means is right over in this area, you see that the Bollinger Bands are actually contracting or squeezing in, basically. And so what actually happens is the expectation is that the move is going to be pretty dramatic. So right here, you see that the bands begin to widen, and what happens is it actually fell to the bottom of the Bollinger Bands. It continued to widen, and then there was an upwards movement. Now, one thing to keep in mind is that you always want to confirm or have confirmation of the trend before you purchase, because the signals can come early, but may take time before there is an actual breakout. So that is one con about the Bollinger Bands, but it's very great if you're someone who likes looking at a naked chart. And I'll tell you why. When the candlesticks are at the bottom of the Bollinger Bands, it's basically an oversold condition. And a lot of traders will maybe enter into a position for a call because it's a good time to buy. If it's at the bottom, that means that there's a very good chance that there's going to be an uptrend. However, again, like I stated before, sometimes it may take time for that move to actually happen. So you want to have some type of confirmation. You may want to put this on your chart with an EMA, some type of RSI or something like that, so that you can confirm, have some area of confluence that it is going to, incline. Now, testing or retracing of the 20-day moving average could be a good area of entry, but you will want to find key levels of support and resistance to confirm. All right. So again, if the candlesticks are at the bottom of the Bollinger Bands, it's oversold, and this is generally a good time to buy. And if the candlesticks are at the top of the Bollinger Bands, it's overbought, and this is generally a bad time to buy. Now, let's see here. Let me just minimize this just a little bit. I'm sorry, guys. Now, Bollinger Bands are essentially a trading tool used to determine entry and exit points for a trade. Using only the Bollinger Bands to trade is a risky strategy since the indicator focuses on price and volatility. These two lines, these outer lines, are basically volatility bands. So keep that in mind. Also, you want to make sure that you have more than one indicator to buy, because a stock can still hit the bottom of the Bollinger Bands and fall further to the 200 exponential moving average. And if this happens, what you would want to do is a little bit of fundamental analysis. You might want to go and check and see what happened with that company. They may have had bad press or bad earnings, which is normally the cause of this. Or it could have been something, outside of the realms of that, like, a pandemic such as COVID, right? All right. All right. So we have reached the end of this particular presentation, and I know it was a lot of information. I did go ahead and put it together in this format for you guys so that you can have it to refer back to, and that's why I was very intentional in doing the color coding, so that it can make a little bit more sense to you, because I know that it is a lot. And please, if you have questions, we're definitely going to get to them. We just ask that you save them more towards the end so that we can show you how to plot these particular indicators in TradingView or stock charts. I'm not sure which one Ray is going to use. All right. So we're going to give him a minute to get started. Ray, let me know when you're back.
Yeah, I'm here.
All right, cool.
All
great.
So TradingView, screen share. All right, you guys see my screen pretty good? Check. This is TradingView. Download. Also, Kay, are you gonna because I know Francia was asking if you were gonna have the slides downloadable.
I can try to see if I can do that for you. But if not, I will let you know that it's going to be in Market Facts and Resources. You guys know that room that you hate to visit in the Wealth Squad. I'll have it in there for you so you can, have the video and you can watch it and, look at it in your leisure.
Yeah, I'm not showing the chart yet, so I'm just showing y'all. Yeah, it'll be recorded. It's being recorded, I think, by me and by Kay.
Absolutely.
So we'll go ahead and get started. Let's see.
And let me know, Ray, if you need me to walk you through the indicators that were covered today, because there's so many,
Yeah, just in case I forget which ones we covered.
Absolutely.
And I know I never use stochastics. All right, so I just want y'all to, I'm gonna go over kind of like navigating here quick, TradingView, because I know people want to use TradingView. So when you type in TradingView, this is the screen that's gonna pull up. So you would type in your ticker in the search bar, which I think, hold on, let me see what the chat is saying.
And I'm gonna switch over to the chat just to see if I can knock out some questions too while you.
Yeah, and if they ever say they can't hear me, just let me know.
I got you.
All right, so you search the ticker. We're just gonna go with something that's kind of volatile. I'm gonna go probably with Tesla. So you would click on the ticker, the stock. It's gonna pull up this page, and then you would just click full featured chart. And boom, let me exit all this stuff off of here. So that's like what I use. I don't really use indicators anymore. Boom, except for volume. All right, so we'll start with Bollinger Band, since that's like Kay's favorite. So that's the last one I remember. Oh, wrong one. All right, so to throw an indicator on your screen, you go right here to indicators. You click on that. Bollinger Bands. Boom. All right, so this is Bollinger Bands. Does everybody see my screen well? I don't use indicators anymore because it's too much on the chart. They're confusing. If you don't, if that's not really your strategy, like I don't like having all those indicators on my page anymore. Plus, sometimes I'll be on my phone, so it's kind of hard to see it anyway using the TradingView app. So can everybody see my screen very well, or do I need to just do this?
Yeah, we can see it.
Okay, let me do that. So that should help a lot. All right, let me minimize this, move it out the way. All right, so as Kay was saying, when it comes to the Bollinger Bands, most people like to play off the top. So as you see right here, it's at the top and it's obviously up in an upwards trend. You wouldn't want to go against it. But a lot of people, when they're first starting out, they see, okay, if it gets to the top, it's supposed to come down to the bottom. But you know, it's supposed to, once you kind of get to using it, you understand that if it's in an upwards trend, when it's going at an angle, let me minimize it back.
And that is a beautiful consolidation period where you see those Bollinger Bands tighten somewhere between like the end of October right up until like November 16th. It's consolidating. So that's an indicator that there may be a very bullish uptrend. And let me take that back. Not necessarily a bullish uptrend, but that indicates that there's going to be a very big price move. So it's a consolidation area where those bands are very tight between that time frame, and then it actually hits the bottom of the Bollinger Bands, which is the perfect buy signal right around. I think that says November 16th. And that's normally where traders will enter to do a call. And that's exactly what happened. You can also look at the candlesticks right below. You see that the volume definitely came in to confirm that price move, and that is exactly what happened. It actually, ran up for quite some time. That was a very good one. That's Tesla, and this is a 4-hour chart. Okay, so yeah, this would have been a very, very good play, a very clean play as well, and a very good way to make some money.
Right. And so a lot of times what you will see is there'll be a period. Let me get off the annotation part. There'll be a period of consolidation before upwards move. But you know how Kay was saying that when something gets to the top of it, normally it comes down. So people would be thinking sometimes when first starting out with this indicator that okay, it got to the top, so now it's going to come down to the bottom.
Right.
Um, and when it's in an upwards trend, as you can see, it's going upwards right here. That's not something that you would want to buy put because it's not going to come directly down. It's going in upwards in the direction, which is why I drew that arrow kind of ugly. It's going that way. So it's like in the upwards channel. So you wouldn't want to bet against it until maybe it kind of got right here where it's starting to trade horizontally. So let me redo this more horizontally. Now that it's at the top, it can come down. And as you can see right here, let me annotate it so you can see if right here it touched the top and now it came down.
Yep.
So far, does that make sense to everybody? Do you understand that? Right. But when does that mean when contracting?
The contracting, so the Bollinger Bands, and I would encourage you to go back and watch the video from the beginning. I don't want to, and not to be rude, repeat just for the sake of everyone that's in here. But again, when the bands actually contract, those two outer bands are going to be volatility bands. So that means that is in reference to the volatility. So that's what that means. Once the volatility picks up, the bands will begin to widen. And then that's when you may see a larger price movement.
How do you know when it's at the top? So let me clear all this out. Clear my drawings. Hop out the annotation part right quick. Click this, remove, click that, remove. All right, so how you know it's at the top? This part, all this right here is the top. This is the top. So does that answer your question as far as what the top is? Um, okay, you said got it. All right, bet. All right, so are we good on Bollinger Bands? Does everybody get the gist of it and how it works and why sometimes, even though it's touched the top, if it's in a, let me clear this annotation part out. Clear on my drawings. When it's in an upwards channel like it was here, going upwards, why you wouldn't necessarily want to play puts off the top unless you want to do like a quick scout, like these could have been quick scouts right here, but it's not enough. And we kind of want to concentrate on getting more clean moves. We don't want the iffies. We want the more guaranteed because it's gonna throw off your trading psychology. And you don't once your trading psychology takes a hit, it's gonna take you building a lot of confidence to get it back up. So hopefully that makes sense to everybody. Um, I use the hourly, the 4 hour, the 15-minute, the hourly, the 4 hour, the daily, the weekly, and the monthly for the strategy I'm starting to utilize now. So if we're good on the Bollinger Bands, I'm gonna go ahead and exit Bollinger Bands off, and I'm gonna pull. I keep clicking this wrong one. I'm gonna pull up. Let's see, RSI, relative strength index. Boom. And for the people who's asking how you pull up indicators, you click right here, FX. So let me annotate that. This part right here, FX indicators, or you'll probably see like on mobile, it'll just say FX. That's what you click on, and then do the drop down bar. And make sure when you're adding indicators through TradingView that you're not accidentally adding a person's indicator that they made up, because you'll see a lot of people have made up indicators or just the indicators that they like to use. And I use TradingView. I use Pro Plus. So I use a paid plan. So let me slim this down. Pull that contract in. All right. So as you can see, I would say looking at this chart right now, and it's always obviously easy to come back and look at it. So you have to train your eye to see it in real time. But right here on the 4 hour would have been a good buy, because of right here, it's in. Well, let me annotate that better. Let me clear both of them right here so y'all can see what I'm looking at, so we can be on the same page. Boom. So to buy right here, because this is closer to the bottom of the RSI, and we know that the bottom closer to this 20 to 40 range is the best time to buy. And we don't want to buy when it starts to get into these overbought. I'm tripping. Overbought spots, because as you can see, it lived up here for a little bit. It came down, but it never really truly fell out of this upwards moving channel, which let me annotate that so y'all can see what I'm talking about. And Kay, if they ask me stuff, let me know so I don't.
Yeah, I'm answering questions, but I don't want to get held up on questions because I want them to be able to get through seeing it on a chart, and then we're going to have to reserve, answering individual questions towards the end, just so that we can get through knocking out, how to plot them on the charts.
Yeah, I just seen your message. My bad.
It's all right.
I don't be liking to get distracted. All right,
Okay.
so as you can see right here, like I said, on this circle down here at the bottom of my screen on the RSI, in this section right here, it was towards the bottom, which would have signaled a good time to buy in. And a lot of times when you buy in, I always emphasize buying more time on your contract than you would normally need. So most people who play like 15-minute, hour, 4 hour, they probably consider it like a weekly play, but it'd be better just to buy something that's 3 weeks out. And it's always better to buy contracts on the third Friday of every month for whatever reason they have the most volume and the most open interest. So as we can see right here, just using the RSI, even though we know that it's better to get more than just one indicator to confirm the buy that we want to do. We could have bought right here on this dip on the RSI, because we seen right here it had already come down. Bought right here where it's the red circle up here, you can already see, even if you just look at the bigger picture right here, that it had been consolidating for a while. And price, when you start to see it getting smaller and contracting in price, it's often a good time to buy, because you know that a move is about to come, because it's less volatile. And you'll start to learn that money likes to leave volatility and seek assets or stocks that has less volatility. And that's when you start to see the pops, right? So as you can see, like I was saying, on this red circle, it was a good time to buy. It was consolidating already, and then it runs up, and you start to see the RSI get hot, which would have already signaled maybe right here, maybe to get out, but you also could have held it longer. But that's why you have other indicators in place. And when you start to see that it's in the upwards channel, as long as it doesn't break out that channel, for the most part, you're good. So does everybody have an understanding of how the RSI works with this example, which was a perfect example for right here? Upwards move. And as you can see, it starts to get hot over here. Now it's dropping down here, and there has been a little bit of a pullback up here. And this would be like a support area in a way. So does that make sense?
It's amazing that this is on a Tesla chart because we all know that Tesla does not respect the RSI.
Yeah, so that's why I said with the overbought part, you would
Yeah.
need a little bit more to stay in. You probably could have went up to a higher time frame. Matter of fact,
Oh,
let's
but also remember that tip that I told you all. So for a company like Tesla, this would be a great time to use that trick of drawing the support and resistance on the RSI because it could actually help you to determine some key sell-off points, especially when you're dealing with companies like this. But yeah, Ray, I think we're pretty good on this one.
all right. Pull up the MACD. Boom. Put this one off. It's loading. Let me bump out the TTM squeeze.
Which one are you doing now?
The MACD.
Oh
Let me
yeah, okay.
retry to populate it. Bro, I don't know why this taking forever to load. Let me
Wait.
refresh. Load. I wonder is my internet messing up? Dang, it might get thrown off if I exit. Can you still hear me, Kay?
I can hear you. Hmm.
Okay, I might have to exit out of it and come back to it. Full chart. Because I don't want to flip on Wi-Fi, flip off Wi-Fi to get it right. That's going to throw everything off.
Got you.
Bro, that's really doing it right now.
So while he's looking that up, I just want to say it's an amazing turnout in here today. We have about 497, people in here today. It's pretty great.
I'm going to stop screen share real quick. Hold on.
All right, cool.
Oh, yeah, I'm going to have to.
And I know some of you are probably wondering what indicators go well together. You can do the MACD and the RSI. You can do the MACD and the exponential moving averages. You can do the MACD and, well, actually, you can do the Bollinger Bands and your MACD. You can do the Bollinger Bands, the MACD, and the RSI. You can actually just play around with the indicators. But again, it's always important to make sure that you have more than one indicator on your chart because you always want to confirm whatever price action you're seeing. And also, a lot of people are asking in the chat about time frames. Now, we covered this in the last video, but your time frames are going to be contingent upon your plan for holding. So if you're looking to get into a contract for a month out, you might want to look at the monthly chart and then scale down to lower time frames like the weekly, the daily, and then you scale down to smaller time frames so that you can get a key entry. But we have the MACD back up on the screen, so I'll be quiet now.
Yeah, my bad, y'all.
You're good.
That
Just
annoys
didn't
me.
want that awkward silence.
Yeah, because it was definitely because I was embarrassed. But anyways, so I think this is actually that same point that we were looking at the RSI with. So we would have got another confirmation with the MACD to buy there in that point, or it might have been a little bit more back here. But either way, you see that the MACD crosses the signal line and then that there's an upward move. So you see it with the blue box where I've already circled it at. If not, let me circle it again in red because blue might be a weird color to look at. But down here, you see the MACD cross the signal line and it's an upwards move. And a lot of times when you're looking at the MACD, a good thing to look at is when those lines start to get further across, further separated from each other, that means that's a good momentum move. So you will know to stay in that play because as you saw with the RSI, this was a good time to buy in here. And then there was an upward move that preceded it. Now, when you get over here to this other side right here, where I'm drawing it, you'll start to see that there is starting to be a downwards move. And as you can see, the MACD and these lines toward the end are starting to get further apart. So we might be in a downwards trend, which obviously is probably because of the other things that are going on in the market, which is probably starting to cause this move. And also, if you don't remember, we are on a 4-hour chart. So you want to also look at other charts to see if there is time frame continuity going on. Yes, well, it's not really a red line. The MACD would be the blue line. The signal line would be like that's more of an orange line. That's how it is on my chart.
Yeah, that's right. It's normally blue and red. The blue line going below the red line is a sell signal, so make a note of that, you guys. And then the blue line going above the red line is a buy signal. Now,
Candlesticks. I don't know which chart you're using, but candlesticks is normally the normal way to look at the chart. I think other people like on like Robinhood or something, you probably have to click the little squiggly line in a circle, or maybe it's the candlestick line to see it. But obviously, we're against Robinhood moving forward. Yes, it's a 4-hour chart, but whenever I pulled up this chart, it was already on candlesticks. Like that's how TradingView is normally set up. And honestly, I wouldn't even know how to go in here and change it to the line because I've never thought about that. And matter of fact, I can see where I can change it at. So up here in this corner where this candlestick is, you would hit that. Let me exit out of this. And
wait,
this
wait,
is
wait.
huh?
But before you leave this chart, can I make one comment? Were you coming back to this chart or were you leaving
No,
this chart?
I'm not leaving it. I'm
Okay.
just clicking up here where you can change it from candlesticks to bars or to, the line. But this is where we found out where I circled in the corner. So that's another thing. If you don't like using candlesticks, if you like using bars, some people like using bars, this is where you would change that up here in the corner. I might need to just make a video on how y'all can use TradingView. But yeah, so that's how you would change that. But go ahead and Kay, what you were going to.
All right, so remember earlier when I was telling you about the histogram, which is at the very bottom where you see the variation of like red and pink and the two colors of green. All right, so looking at this histogram, it actually helps you to get a good gauge on what's about to happen. When you start to see changes in the histogram and the bars start to get smaller, that can sometimes indicate, and I'm going to say sometimes because again, you always want more than one indicator to confirm, but it can sometimes indicate that there is a change in the price direction, which as you can see is absolutely what begins to happen. The colors begin to change, the bars begin to get smaller, and then guess what? It flips over and you're seeing a difference in the color, which is a difference in the price movement.
Right, and you can see like the bigger the histogram,
Mm-hmm.
the bigger the move, the more it's respected on both sides. So the smaller it is, that's probably going to indicate, lower moves. And that's the main thing you want to look at, because if that histogram is getting big like that, that means you can go ahead and stay in that trade. Because that means that move is respected, very well respected.
Yes, the histogram is a part of the MACD.
So let me bump that. All right, so we should be good on the MACD. And then this is the one, K, that I don't use, so I'll let you go with this one, the stochastics, because I ain't even ever thought to myself.
I'm versed in the stochastics. I don't really use it. I stick to the RSI, but I know a little bit about it. So it's kind of similar to
Let me
the
ask you this real quick. Are
yeah.
these the colors that you had already for it, like on your example, or were they different colors?
For the histogram, I don't actually. Oh, I had it in a red and black.
You
Red and
talking
black
about for the stochastics?
for the stochastic. Yeah, red and black.
Okay, change this to black. Because was the K black or was the D black?
So for the histogram, the
The
God dang it,
stochastics. It don't have.
the K line is black.
Mhm.
The D line I had it in red.
Okay,
Yeah.
so it's
Well, that's
continuity on
really
it.
what it is anyway. So.
No, well, not on mine. Let me change the background to a more visible color. Maybe like yellow. Because I want them to be able to visibly see it.
Gotcha.
It'll just be white. All right, go ahead.
Okay, so when it comes to the stochastics, It basically is similar to the RSI. It's a gauge for overbought and oversold conditions. So obviously, when you're dealing with a value of 20 or below, just like on an RSI, when it's below 30, that indicates an oversold condition. So that will be a place where you would enter for a call
I'm just
potentially.
gonna change the black line to blue because it's
That's
hard for people to see.
absolutely fine. That's fine.
Okay.
But just keep in mind, no matter the color of the K line, the red line is, the red line is going to be your D line. So the color that he's changing it to, just know that the red one is going to be the D line. All right. And so a value of 80 or above indicates that it's an overbought condition. So what you can gauge from that is that there may be a potential sell off. So it kind of works like the RSI, but you're dealing with values of 20 or below for oversold conditions and 80 or above for overbought conditions. Um, so that's pretty much, what you need to know about the stochastic oscillator. The K line, which is the one he put in blue, when it breaks above the red line, which is the D line, that indicates a bullish or buy signal. And then when the K line breaks below the D line, it indicates a bearish or sell signal. So it's pretty simple, kind of like using the RSI. Don't overthink it, but a lot of traders don't really use the stochastics. And if they do, they use the stochastics and CCIs. We have a lot of indicators to cover, you guys. But these are just some that I personally use and Ray may use, but it's not limited to these. As you can, just as he has this right here pulled up, you can see there are so many different indicators. You just have to find what works best for you.
Yeah, so we're gonna go ahead and go on to like the moving average. Um, so this is I got pulled up the regular moving average. So this would be the SMA. And it's at a 9 period. So on trading view, you would go over here, you would click on the gear, and then it normally would be on style. So you can click that, make it any color that you wanted to. And then click on inputs, and would be how you would change the time frame. So we're just gonna click 21 because that was already 9. Just so you can see that it changes. Boom. So that's how you would change it. Most people use it just to see the trend that it's on. As you can see right here, it's on an upwards trend. And sometimes people play like bounces off the moving average so that they can see they use it as a support or as a resistance, depending, like if it crosses under it, like over here. I should have drew that better. When it crosses it over here, people use it as a resistance. So if it bounces off of it and comes down, they know that it would be either in a downtrend or whatever. So some people like to play the bounces or whatnot. I don't play moving average moving average bounces or whatnot. And some people um they tend to like to use like the EMA, which is the exponential moving average, and they'll like to use like that in conjunction with the VWAP. So let me clear this annotation. So let me exit off the moving average. Let me go to the EMA.
And the
Exit
difference
from
between the two, you guys, is one is slower, one is faster. And so you might want to use, some people use the SMA, which is a simple moving average, on longer time frames if you're planning to hold for several months to a year or longer or something like that. And then some people might use the exponential moving average because it's a faster moving average. So I know I didn't cover the SMAs in here, but those are pretty much the differences between the two. Or you can just use the EMA all the time, which is what I do.
Yeah, people use the EMA mixed with, they'll use the EMA 9. Let me change it back to 9.
For what you're
9.
doing a day trade?
Yeah, they
Yeah,
like to,
you're doing a 4 hour, right?
yeah, well, I can go down the time frame.
Yeah.
They'll use it like on the 15-minute time frame, the EMA and like the VWAP crossover. Oh, that looks super small.
And we're gonna cover the VWAP in a different video. We're gonna
Oh,
cover,
this is the wrong one. Yeah, the VWAPs, they be having different stuff. So let me just go
yeah.
ahead and exit off that one. I can't remember what the input is for it. But going back to the indicators, a pair that people would like to pair together would be like for the golden cross would be the SMA 50 and the SMA 200. And that's what you will see like on a lot of experienced traders. charts, they'll use those two, and then they'll play the golden cross, or they'll see if it's going to be a death cross. So the golden cross is when the 50, let me go up to a higher time frame. Let me go to the daily. When the 50 crosses above the 200, and the death cross is when the 50 crosses below it. So let me set these up. 50, 200. So those are the 50 and the 200 EMA. I mean, 50 and the 200 SMA. And I think actually, which one is which? I need to set the colors. This one, let me set this one to green, so y'all could definitely see the difference. But I see a cross above it right here. So that would have been a bullish indicator. And boy, that boy flew. Boy. So this is what I'm talking about. When the 50, which is the green, crosses below, and let me make it a harsher blue, so y'all can see exactly what I'm talking about. And I'm gonna notate it. And Kay, if they're saying something in the chart to me, let me know.
Yeah, I said something to you.
You
For
did?
sure. Yeah. Uh-huh.
Oh, okay, my bad. I'll look at that here in a second. But right here you see the 50 cross above the 200 SMA moving average, and as you can see, even though it comes down and breaks below it, the 200-day moving average acts as a support and it bounces off. And if you would have got in right here at the cross and you held, even though it came back right here, let me exit off an annotation. That would have been a good move. So you see that this is back in the earlier stages of the pandemic. So this would have been April. So if you would have bought April, March, April, right here on the dip, and you just rode it back up because they're so far away from each other, you would have been good, eating really, really good. Like from what it looks to be 114 all the way up to 800, millionaire. So does everybody understand that? We can't tell where they are.
Yeah, I think you fixed that issue.
Oh, okay. Trying to scroll up. Oh, my bad. So what was the next indicator?
So we did the RSI. I believe we covered them all. The Bollinger Bands, the RSI, stochastic, MACD, and moving averages. We covered them all. I guess we can, hop into answering some questions.
Okay, so yeah, and as far as this, has everybody understood it? I know I kind of like moved it around a little bit quickly. Yeah, VWAP is the volume weighted average price. Um, but I hope everybody has been able to see the chart well. Did y'all get the understanding of the chart well? I hope not understand how you plotted the fit. They plot themselves as far as like the SMA. I just changed the time on it in the indicator. So when you come on Trading View, when you first type in moving average, you click on settings over here. Oops, let me clear all this out.
Mm-hmm.
Clear my drawing. Boom.
A good
And you
way.
go to inputs and you just put input the length, which would be the period. So 14, 21, 200. But the main moving averages that people use are 9, 21, 50, and 200. Those are the main ones that are used. So which ones are we looking? You would be looking for the 50 to cross above the 200. So just like whenever you get off here, just look up golden cross and death cross, and those are good things to be aware of.
The FUBO question, by it being at the top of the Bollinger Bands, does that mean it will drop soon? Okay, so that was something that I stated in the beginning, is that when it comes to the Bollinger Bands, you don't want to use that indicator alone, because sometimes it takes a while for it to actually do the implied move that you're expecting it to do. So that doesn't mean it will drop soon. It will potentially drop at some point, because it's easier to be a bear in the market than it is to be a bull, obviously. But it doesn't mean that it's going to drop soon. Asar, when it comes to affordable, inexpensive trades, the cheaper the cheaper the stock, the cheaper the contract. So just keep that in mind when you're looking for things to trade.
Which I'm trying to see. Which one's the last one you answered, Kay?
I
mean, any on.
Let's take some live questions. You guys can unmute yourselves if you like.
Yeah, hold on. Did I give them that right? I think they should be able to. Can they unmute themselves? Because I can't remember. I think I took it away. I don't know if I gave it back or not.
I don't know. Nope, they said they can't unmute.
Okay, so
okay, we get it.
Stop sharing. Okay.
This will be available to watch again, you guys. It's going to be in Wealth Squad University.
All right, yeah, you're able to unmute yourselves. My bad, y'all. It's because y'all were unmuting by accident and talking. So you can go ahead and start asking questions.
Hello, I have a question.
Hey, John, what's up?
Hey, I'm from LA. I have a question about the RSI. I came in a little late, but I'm at a gathering, but I'm separating myself and just studying it. I just wanted to know about the RSI. Is that chart at the bottom?
Hey, hold on real quick. All right. So what we're gonna do is raise your hand when you have a question. Don't just start unmuting yourself. So everybody else mute yourself, raise your hand, and then we'll call on you. That way people's volume isn't messing up. People trying to ask questions, okay. They don't have to yell.
And Ja, for the sake of the time that we have, we plotted the RSI on the chart already in the video, and then we also covered it in the very beginning. So if you could just do us a big favor and just like rewatch the video since you came in late, just for the sake of time and just to be respectful of everyone in the group.
Okay, I'll do that after. I'm gonna keep listening to the questions, but I'll do that after.
All right, cool. All right. And everybody, if it's something that we already covered, it's not to be disrespectful. It's like we have the room for so long, and we don't want to waste time reiterating something that we've already covered.
All right, so Diana, I'm gonna ask you to unmute yourself so you can go ahead and ask your question. So Diana's iPhone, if that's not you, whatever your question is.
Oh, I didn't have a question.
Oh, well, you had your hand raised. My bad.
Sorry.
Are you good? I guess Nature Healer, you can go ahead and unmute yourself, ask your question.
Hi, can you expand further on the third Friday? Like, do you only purchase plays on the third Friday of the month?
No, I'm not. Oh, my bad. And I guess I said this to be misinterpreted the wrong way. It's not that I only purchase plays on the third Friday of every month. It's like if you look at those contracts compared to other contracts on other Fridays of the month, those tend to be the most sought after and bought and held for whatever reason. I'm guessing like maybe if you think about it on a time constraint thing of holding something too long or holding something not long enough. If you bought a contract that's at the beginning of the month, right? That's too soon. If you buy something at the second Friday of the month, that's too soon. If you buy on the fourth Friday of the month, that might be too far. So the third Friday is kind of like that Goldilocks type contract, I would guess. So those contracts, like when I'm swinging or looking for like a month out, 2 months out, 3 months out, I'm looking for the third Friday month because those offer the best volume and the best open interest. So I know when it comes time for me to sell that contract, somebody's going to buy it. And sometimes people buy contracts that nobody really wants because there's not volume or not much open interest on it. And those reset every day. But still, even in resetting every day, the third Friday is just the best. It's, that's where you will make money at as far as what I've seen. So it's just a cheat code.
Okay, thank you.
You're welcome. All right, so next is Abby's iPhone. Go ahead, ask your question.
Hi, so for newbies like me, what are the best stock options to practice to play with?
Say that again, Abby.
I said for newbies like me, what are the best stock options to practice or play with?
That's going to be a hard question to give you a particular stock. But what I would recommend is look for something that number one, I would recommend paper trading, and try to play around with things that are within, you know, your budget. You know what I mean? And again, like I stated before, the cheaper the stock, the cheaper the option. And so you can paper trade. You can go into various brokerages, and they will allow you to play around with fake money, so that you can get a good feel for what you're doing, and see if you're plotting things or if you're comfortable with what you're doing.
Yeah, I would just paper trade. Like I
Yeah.
wouldn't, if you have to look for beginner stocks or whatever you're asking that question, the best thing would be to paper trade, and I would do it on Thinkorswim. So in Market Facts and Resources, in the options trading playlist I put together that's on YouTube, I would go to that and look at the paper trade and how to set it up. TD Ameritrade themselves actually tell you how to set up on their platform, which is the best thing about them. They teach you how to use their platform. So yeah,
Thank you.
you're welcome. All right, so next is going to be Camille and Sigrid. Go ahead, ask your question.
Okay. I typically use like the CCI, and it's very similar to the RSI, and I just want to know, like, do you like is there something like your opinion about it or some insight about it as to why you would use the RSI over the CCI?
Trader preference.
Yeah, that's trader preference. I've never used the CCI. I actually might just look at it if it's visually appealing for me to try out. But a lot of stuff is just, user preference, and also a lot of it could be that a trader just stumbled upon one indicator before another indicator and they liked it, so they never needed to look for another one.
Okay.
And as far as Malik, your question, how to find paper trade, you would just go to Market Facts and Resources on the Discord, scroll up. I'll have a playlist of option trading videos that are on YouTube that's free for y'all to look at. And I update it at least once a week for you to see how to paper trade and also learn how to set up your TOS Thinkorswim. So I don't know if Webull, because I think somebody was talking about it, if it lets you paper trade options, but I know for sure that TD Ameritrade lets you paper trade options, because it might just be stocks for Webull. So next person, AJ, go ahead and ask your question, and then Steph, I'll get you out there.
All right, can you hear me?
Yeah.
Yes.
Okay. Earlier you were saying that people use certain indicators to do, to find, I guess, their point. What specific indicators do you use personally, from your own experience, like, and how many?
I'll go first. As far as how many and which ones, I've used one that's on TradingView, and I think it's a variant on Thinkorswim, because I just like TradingView charts better than Thinkorswim. They're visually more appealing to my eye. There's something called TTM Squeeze, so I've used TTM Squeeze. I've used RSI and MACD, because when you get them to line up, that's a good strategy to buy and hold, like for swing trades and stuff like that. I tried moving averages, but it was just too many lines on my chart. So those are like the three that I've used and have found to work. But sometimes you need to like look more into the indicators to see what can throw them off and what can cause them to malfunction and give a wrong signal. So yeah.
I used every single one that I've mentioned in the presentation. And just because some of them work well on certain charts when you're looking at different companies, like for example, I don't really use the RSI for a company that's as volatile as Tesla, because Tesla does not respect the RSI. Tesla can be running up to an 80 on the RSI. It just depends on what I'm looking at. And I like to build a little bit of intimacy with whatever company that I'm trading with. So I follow it for quite some time before I actually enter the trade, so that I can see what indicator works best on what chart.
Okay.
Mm-hmm.
Okay, thank you.
No problem.
And yes, you can use indicators on the same chart for the person who asked in the chat. Go ahead, Steph D.
Hey, I'm sorry, guys. Thank you so much for this class.
Mhm.
I wanted to ask, how do you know when you can make an option buy below the bid price?
Okay, so if I'm understanding what you're saying correctly, you're trying to see if you can purchase something below what the current bid is. Is that what you're asking?
Yes, that's correct.
Okay. So
Yeah, good.
I'm sorry.
Not if you can, but like, how do you know if you do it, it will be fulfilled? Are you just doing it because it's being underbought and is a higher probability of it being fulfilled? Because
There,
like, go ahead.
there is no way to know. If we knew, we would all be millionaires. There's no way to know. It's kind of like going to the store. You have in your mind what you're willing to spend for whatever item, and you're not willing to pay any more than that. So that's the mentality that you have to have when you're trading. If you're going into something and you say the most that I'm willing to pay for this contract is $5.50, which is $550, then that's your limit. And if the stock reverses and it comes all the way back and it picks up your limit order, then it will fulfill. But if not, you just lose out on that trade, because there's no way for us to know.
Right. And I would
Okay.
just add this. When y'all are getting into trading, you got to look at this almost like a business and like why people are wealthy. It's the same principles. Like you got to be strict and you got to have rules and you got to stick by them. Like that's going to be the biggest thing that's going to help you with trading. You got to come up with rules on why you would get into a trade, off of what indicators are hitting for you, off of what news did the stock get, and you stick to those rules. If you say, I'm only going to lose 50%, I'm only going to risk 50%, then you stick with that. You can't change it just because you had one or two anomalies that if you would have held by below the 50% mark, that it would have shot up and gave you 100, 200, 300% or whatever percentage. You know what I'm saying? Like once you have the rules and you stick to them, that's going to be what makes people successful and unsuccessful. Because if you don't have any rules and if you have no discipline, you're going to blow your account at some point. So that's like the main thing when it comes to trading and doing this is like you have to have a trading plan, which is basically rules that you abide by. So that way you know why you got into the trade and you know why you need to get out of the trade. And those are going to be like the biggest things to help you be successful. Because if you know why you got into the trade, when you go back and look at the loss, you'll be like, okay, this is why I lost, or this is why I didn't lose. Maybe you were right on, but maybe like now the stock market is just tanking because of the Wall Street bet stuff. You know what I'm saying? So when you know those things, it'll give you confidence to know, okay, I messed up. This is where I adjust it and go from there. So that's going to be like the main thing, that your preparation and your psychology, which if you have rules, you won't mess up your psychology. And a lot of people get their psychology messed up, or they're coming into this with the last $200 or the last 1,000, and they're trying to flip something real quick. And when you trading with money that you need, you're going to trade emotionally. So, and this isn't an environment to ever be emotional with. So those are like the main things that, like, if you take anything from them, say at least take that. You know what I'm saying?
Let's see.
Thank you.
You're welcome.
Okay, we have Jared.
Was it Jared? Oh,
Sorry,
yeah.
my answer got my question got answered on the chat.
Okay, cool.
All
Janae.
right. Yeah.
Hi.
Hi, Janae.
So my question is about more so just understanding, like, with the stock prices being so volatile, I'm confused about what actually makes the option contract valuable, in the sense that even, for example, with the Nokia call, like in a split second, it shot up to $8 and my contract was worth like $1,000. But then in a split second, it went back to like negative $1 million or whatever. So I'm just trying to understand, like, even though this is not, I don't think it's necessary for being successful in trading, just for my own understanding.
Okay.
I understand like how option contracts have value when 1 week, the ability to purchase a stock at, say, $10 above the price might kind of be mitigated by the fact that next week the stock could be $40 below. So I'm just wondering if y'all can give any insight on that part of it.
So volatility is a very, very big thing. Volatility is basically, or implied volatility, think of it as like the run up or the suspense behind a stock potentially running up for a particular event, right? So Nike releases a shoe or Tesla releases a new car. Can we, Tan, if it's possible,
Ready?
you to
Yeah.
mute your
They're
mic?
not.
Can we mute her? Okay. But like I said, think of it as the suspense or build up behind a particular event. Apple releases a phone, a new phone, Tesla releases a new car, or something like that happens. That means everyone has their eyes on this particular stock. And if it has a lot of implied volatility, if it has a lot of volatility, a lot of people are buying, a lot of people want in, it's going to move very fast. But guess what? There comes profit takers. There come people who are, market manipulators. If it moves up in a very volatile manner, it will move down in an even faster manner because stocks take the stairs up and the elevators down. So that's basically why. So when you look at your contract, you always want to look at contracts that have a low volatility when you're entering into them, so you're not affected as much by IV crush, basically.
Okay, but just to kind of clarify, because of that volatility, why would anyone even purchase that contract from me? So like the fact that that Nokia call went up that much, like if I were to have sold that at that time, I'm not even understanding how the person who bought that would profit.
Well, you have to think they may have a higher risk tolerance than you, and they may say, YOLO, it's worth it. You know what I mean? Because we don't know what the stock is going to do. If we did, we would all be rich. But that could be someone who had hundreds of thousands of dollars that they were really willing to risk that made them want to purchase that contract. And then you do have a lot of, millennial traders or new traders who don't understand the importance of implied volatility. So we can't pinpoint the reason why they would want to buy it, but there could be various factors as to why they may want to buy that contract from you.
Okay, that helps a lot. Thank you so much.
No problem. Okay, and you guys, we're gonna give it a hard stop in about another 8 minutes.
Go ahead, Marquise. What's your question?
Hey, thanks for taking the question. So when it comes to the Bollinger Bands, you had a graph up, Jay, when you were really kind of digging into it. I don't remember if it was Tesla or Apple, but there was one.
Tesla.
It was Tesla. There was one candle that broke the top of the band, and it definitely took a quick negative turn at that point. But that was the only candle I saw that broke the Bollinger Band, and it didn't look. And I haven't seen many that do that. Is that a good indicator that it will go take a negative turn? And I guess the last question is, will this class be up immediately after the hard stop?
I wouldn't say immediately up after the hard stop, because it takes time to upload it to YouTube, because that's where the link will be posted that leads you to where the video is. It's not actually in the Discord. It's just a link posted in Discord. So with this being over an hour recording, I'm pretty sure it's probably going to take some time to upload, but I'll let Kate answer the first part of your question.
I appreciate it.
Oh, because it's the Bollinger Bands. So sometimes when a stock, so keep this in mind, the Bollinger Bands are said to capture at least 95% of the price action, right? So the price action would be the candlesticks moving within those two bands. Now, when you see it trade outside of the Bollinger Bands, that doesn't necessarily mean that it's going to fall. It doesn't mean that at all. But one thing to keep in mind is that Once it's at the top of the Bollinger Bands, a lot of traders don't enter in positions because the sentiment is that it could potentially fall. So by it being at the top of the Bollinger Bands, that's the sentiment already. It piercing through doesn't indicate that it's going to fall. The fact that it's already at the top of the Bollinger Bands just indicates that it's going to potentially or eventually go down. So I don't want you to think that that one candle piercing out of the top of the Bollinger Bands indicates that it's going to fall. No, the fact that it's at the top means that it's eventually going to fall. Does that make sense?
It does. It makes perfect sense. I appreciate it.
No problem.
All right, Maxine, go ahead, ask your question.
So in regard to something that was brought up earlier, what are the limits to the Bollinger Bands? How do you set that up properly? And how did that impact Fubo again, just out of curiosity? Happy to expand on my question.
So I haven't charted Fubo to answer that. And unfortunately, we're not charting individual stocks.
No, it's all good. It's just, it was mentioned earlier that it might be concerning. It's
Okay.
just, that caught my attention.
Okay. And then what was the first part of your question?
I think how to set it up correctly, right?
Yeah, exactly.
Yeah, you just load it onto your screen. There isn't any specifics, or if other people use specifics, most people just go off the default, which I'm pretty sure.
The default setting for the Bollinger Bands.
So default Bollinger Bands. Okay. Thank you. Yeah.
You're welcome. All right, let's see. Lou Pope, go ahead, ask your question.
All right, thanks guys. So I've been a long time holder of Amazon, but I really didn't know like to actually trade it. It was just having faith in the company. But what piqued my interest is based on what you just mentioned, talking about the MA50 crossing the MA200. So looking at Amazon, it's like oscillated like 3 times since the beginning of this year. Like, what does it indicate when they're oscillating like frequently in a short time span?
Hold on, what was your question again? My bad, I was distracted in the chat.
So you mentioned, I think the MA50 crossing the MA200 was good. I can't remember if that was the golden cross or the death cross, but
Yeah, that was the golden cross. Whenever the lower MA crosses above the higher MA, so 50 crossing above 200, that's the golden cross. So that's bullish. Okay. When the 50 crosses below the 200, that's the death cross. That's bearish.
Okay, so what does it mean when they're like oscillating between each other in a short period of time? Like it's done it maybe 3 times at the beginning of the year.
Yeah, it doesn't mean anything. Anything that crosses on anything where we look at crossovers and they're doing that little back and forth thing, that doesn't mean anything. That's kind of like, I guess you could call it, consolidation, but it isn't a time period you want to hop in at. Like I would just wait on that. Anything that's choppy, don't hop in it. It's just going to slice you up and throw off your psychology.
Okay. Even at the golden crossover.
Right. If it crosses, you might want to hop in it, but if you see it immediately cross back under it or whatever and getting choppy, immediately just go ahead and jump out of it.
Okay.
Like whenever it crosses, you want to see it start to go apart and separate from each other. That's how you know it'd be a good momentum move.
I want to ask him something about that. So you're saying that it's oscillating and is it happening back to back? Is the move noticeable? Is it converging or diverging? Like I want to know exactly what you're saying. I want it to.
Can I share my screen? I don't know. I'm looking at it on Trading View.
The reason why I'm asking is because I want to see whether or not the crossover or under is big enough that you can say this is a move that I want to take, or is the oscillation that you're seeing just a small cross under, a small crossover?
Okay. You mean the price between it?
Yeah.
The max price between it, the first time it crossed over in a golden cross, the lower was 31.58 and the upper was 3,300.
30. Oh, that's a pretty big move. Can you do me a favor, Luke? Can you, in the Discord, my name is iCurlyK. You can send that to either me or Ray, and we'll actually dissect that with you. But for the sake of time, we got 2 minutes. And,
Oh, it's okay.
And
I'm
very
keeping it
interested.
regardless. I was just curious.
Okay, I'm interested in what you're seeing, though. I'm interested
Okay.
in what you're seeing. So please.
All right.
Okay.
Okay. And which channel should I discuss it in? Or
Just send it to me, direct message, iCurlyK in the Discord.
all right, we'll do. Thank you.
All right, cool.
All right, go ahead, Tyrell.
Yes. My question is, how do you know what stocks to look for when you're doing call options? Like, even like with the whole GameStop, like I would never think to invest into GameStop at that time. So I just want to know, like, how do you guys pinpoint what stocks to look at to do call options? That's my question.
So some people use screeners and scanners, FinViz and FlowAlgo. Yahoo Finance has a screener that actually shows you like where the volume is being placed for the day. Some people just trade with companies that they shop with. You can look for companies that are trending in the news. You may be looking at earnings plays, people that are getting ready to, or companies that are getting ready to report earnings. I mean, it's just, you have to keep your ear to the street and your eyes to stock scanners and screeners and things like that to pretty much figure out what's going on. So it's a lot of fundamental research that goes into it that can help you to make those types of decisions. But obviously a lot of people were talking about GameStop rather, and that was an entire crazy situation with GameStop. Let me just say that it was a bet that was placed, but those are ways to find companies.
Okay.
Yeah.
So you said FinViz and
FinViz and FlowAlgo. What's another one, Ray? Yahoo Finance, FinViz, FlowAlgo.
Scans, investors.com.
Yeah.
And some people use like FinTweet.
Yeah. And so, all right, everybody, we're getting ready to come to a hard stop. However, there's something that I want to say to everyone. Ray and I are here to help you guys always if you have any questions, but we want you guys to help us to help you. Utilize your resources. Investopedia, utilize YouTube University. I put a list of books into the community. We want you guys to also do your work because it helps us to help you. It's kind of difficult to go through an entire course through a chat room. So sometimes, just Google or go to Market Facts and Resources or Wealth Squad University so that you can see what content is already out there. And then, always bring us your questions. We're more than happy to help, but we also want you to do a little bit of the work yourself so that you can be a successful trader. And if everyone understands that, put a 1 in the chat. All right. Great. All right, Ray, you got anything else?
No, I don't have anything to add.
All right, we hope you guys enjoyed it. Let's all become wealthy and let's get this money. We will see y'all on the trading floor tomorrow.
All right. Peace, you guys.
Bye.